Welcome to this video, which is on Thursday 29th of June. It is 9:45 p.m. GMT. Now, in terms of today's video, I want to look at what I consider to be 4 high probability chart setups. Now, I mentioned my 2 favourites at the weekend in the weekly forecast. They were long GBP NZD and short Euro JPY. Now, in terms of GBP NZD, I did a video on this on Monday. It's the one before this one if you want to check it out. It's turned out to be a really nice trade, a few hundred pips profit already. I think there's probably 1,000 or more to come. It's a great position trade. Just want to give some potential entry points and also just go through managing an open profit in the markets. Now, in terms of Euro JPY, short coming into this week, promptly got stopped out. Euro has surged higher. Where it is now, though, I just think it's a great sell for probably around 400 pips just as a swing trade. I think it could have more potential on the downside, but at the moment the bulls are in control, but I think that is going to end. Also want to look at Euro GBP, GBP CAD, which I think look also really good setups. And also when I go through the charts, I want to discuss the sentiment behind them, and in particular the bullish sentiment that is towards the euro at the moment, which I think that bullish sentiment is going to break fairly shortly. We shall see, but let's go through the charts and we'll chat more about sentiment. Just look at the technical setup. Start with which one should we start with? GBP NZD. Welcome to this video today, which is on Thursday 29th of June. It is 9:45 p.m. GMT. Now, what I want to do today is look at some charts in a moment for what I consider to be high probability trade setups. And in my forecast of the weekend, I mentioned my 2 favourite pairs coming into this week. They were long GBP NZD and short Euro JPY. Now, I did a video on Monday on GBP NZD. It's the one before this one. Just want to update the chart setup. It's moved nicely higher, so decent profit, but this trade has got far further to run on the upside. I just want to go through potential entries and also managing an open profit. Euro JPY got stopped out as the euro surged higher. Where the euro is now, I think we are going to see a significant retracement. I think just to the first level of support that I'm looking at, it's about 400 pips. It's a lot more if basically the big long-term fundamentals kick in, which I think they might. But for now, we're just looking to swing trade this one short. Looks decent risk reward trade. 2 other trades I want to look at. EUR GBP, so euro pound, and also GBP CAD. I also want to discuss a little bit about sentiment, and also in terms of sentiment, I want to specifically focus on the sentiment to the euro at the moment, which I think the bullish sentiment is rapidly going to change. We shall see. Let's start with the charts and we'll do GBP NZD first. GBP NZD daily. Obviously we looked at this one at the beginning of the week and we thought it looked a really good opportunity. And just want to go through it here. Obviously if there's any new viewers watching, it's just really keeping everything very simple. Okay. And just getting a high odds trade, with logic that you can understand. Now, in terms of why we think, or thought, sorry, on Monday, this was such a good trade, was this ADX line, which is an indicator that we don't use that often because it doesn't give many setups for us. But when it does give setups, they're normally good ones. And what we like to do is just use a single ADX line. You see a lot of people use 3 lines. We don't bother. We just use the one. When it comes above 40, that's the black line here. We just wait for it to turn down. When it turns down, it's signalling that the prevailing trend is probably coming to an end, or there's a high possibility. And the prevailing trend can be up or down. This trend is obviously up, bit of sideways. There's the warning on the ADX 40, and bang, down she goes. Now, when we're looking at this at the beginning of the week, we had another potential ADX turn down, which obviously has now turned down, to signal the end of the prevailing trend, which is down, for it to move to the upside. Now, in terms of the turn down, we said it probably occur through 176. If you're on the email list, we actually came in through a little bit below 176. Okay, we just anticipated the turn down. That's just from our experience. Okay, so it was one, I think, 75.30. Goes up, takes out the 20-day moving average up to 178. So personally, so far, happy with this trade. They can always go wrong, of course, but so far so good because it's moved up quite nicely. Now, despite the fact it's moved up quite nicely, I still think it's got further to go. And I think, in terms of, we've taken out 178. So if we draw a trend line here, we've got this congestion, okay? That candle there, body, and that candle tail. We're above a round number as well. So that's looking good. Now, where could we go? I think, if we follow through tomorrow, the first stop, and I said it in my previous video, is going to be up towards 182. And you can see why I've drawn that line there, because big blue candle up, bit of support, then bash, off she goes. Now, I personally think this is the first stop. Where do I think we're really going? I think we're going all the way up here. Okay, so up to 188. Now, obviously, that's just our opinion, but I personally think it can do that. I know the fundamentals, or I think I've judged them correctly behind this move. It's a big, strong move, and I think it's going to be a big, strong move. It's an okay move so far. Now, in terms of if it doesn't follow through, the place to buy it back to is the 20-day moving average. You can see the 20-day just snaking that body, and of course you can do that between the low and the close of the previous day. Okay, so that looks like pretty good support, and also you can cut a diagonal line there as well. So you've got double trend line support. Now, if you're buying the breakout, just go with it. You buy the pullback to the 20-day moving average, make sure your stop is behind that tail. Okay, there's always the chance of a pullback, but I think the fundamentals are firmly in the pound's favour. Why? Because the UK probably going to be raising interest rates soon. New Zealand won't be, in our view. Also, in terms of we're going to move from risk, the New Zealand dollar is going to get hurt badly. It's overbought all over the place. British pound is just going to fare much better in a move from risk. So what you've got, I think, is the fundamentals in favour of the pound anyway. And obviously we get a move from risk, which we expect. The pound could go a lot higher. Now, on the ADX, again, you need a little bit of experience reading it. Normally now I can anticipate roughly what level it's going to turn down through. I did say a little while ago I'll put a expanded PDF in the members centre on this, which I'll do. Sorry, I've just been a little bit busy, but it's a very effective indicator. If you use price action and just simple fundamental analysis behind the chart, I think it works really, really well. Right, let's move on to Euro JPY. On Euro JPY daily, just before we look at the chart, we're going to look at the CFTC net traders ratios. Last week, this is from last Tuesday when the report was compiled. There's one out obviously on Friday. If you're not a regular viewer of our videos and you want to know more about the CFTC net traders ratios, look up the videos on our site. It really is, for us, the most powerful tool in Forex trading. Now, in terms of last week, non-commercials 3.6 to 1 in terms of longs over shorts. Commercials 4.1 to 1 in terms of shorts over longs. So you got divergence of 7.6 to 1 between the groups. Now, non-commercials very bullish, commercials bearish. And last week, these groups have started to diverge a little bit quicker. Either commercials are coming in, selling harder. Non-commercials are coming in, buying harder. This divergence, this week's report comes out, be above 10, and that, I think, will basically signal a move in favour of the commercials. A lot of people say, are the commercials really the smart money when you see something like this? Well, you've got to keep in mind, they're not losing any money, are they? They're just hedging a cash position. They just know when a currency is overshot, and they thought it had overshot at about 125. Now it really has overshot. So we know that with all things being equal, the commercials will really sell this. We can look on Friday, and I'll do another video. But what we've got effectively is Draghi talks up the EU economy, but cautions against low inflation and says monetary stimulus isn't going to be changed. Okay, so it's going to stay in place. Now, the market is pushing the euro higher on the view that the ECB will basically reduce stimulus and maybe even raise rates. I mean, Draghi, as I already said, that's not on the agenda. So this is, for me, just a real sentiment-driven rally that's gone too far. This big candle up here, this isn't all fresh buying at all. There'll be a lot of stops cleaned out there as well. They're buying back their positions. There'll be some buying in there, obviously, but a lot of it is shorts having to cover the position. Okay, then we go up, up, and now see this tail here. Attempts to hit the round number at 129. Now, from our perspective, we just think this is a sell. Okay, and I'll just say where I think it's a sell, and it's what I would call an early sell. So just basically we're above 128, which is a round number. Okay, so you want it to come back through 128. I'm going to say a good level to come in at would be about 127.65. Now, the fact that it's fallen short of this round number here, you know, round numbers are important, so I wouldn't rule out another bounce, okay, above the 129 level this time, because anyone who's like us, who's looking to be bearish, might just tuck their stop right on the round number, okay? Done videos on this. That's where speculators tend to put their stops right near the round number within a few pips. So I'd say a good stop here is well back from the round number, 129.60. So just up here at me, just through the round number. Now, where could she go to? Well, the obvious level is there, isn't it? Because sentiment is so bullish towards the euro, okay, if we do crack lower, that level, in my view, will not hold. I think we could go back to here, the 20-day moving average, but my own view is that we should go down to here, okay, so about 122.50. Now, in terms of this is a very aggressive trade, but the risk reward is pretty good. If you look between our entry and our stop, yeah, we've got basically 3 to 1 plus. Okay, I think if I've done my maths correct. So for us, it's a good trade and one that, yeah, I think is worth doing. Now, I'll put here 90D and K rollover. Okay. Now, what I mean by that is a lot of people will use the stochastic as a cross back through 80. I think when you get these really exaggerated moves, once you get both lines over 90, okay, any divergence will do, and the fast line has moved across the slow. It's now 89.58. So that's just a little bit of backup. RSI is still at an extreme but turning flat. So I personally think this one suits an aggressive entry. This one's given us a few losses over the last few months. It's given us a few profits, but we've had more losses than profits. But the market, yeah, basically doesn't have a memory, so you're just looking at how the trade setup looks at the time. Now, I actually do, and people said, do I still stick with my view? It's going down to 118. Yeah, I do actually. I think it's going all the way back down there eventually, obviously. There's the gap on the elections in France. But for now, just think it's going to go back to that 122.50 level. So let's move to the next chart. We are on the Euro British Pound daily chart and put up the CFTC net traders positions. Now on Euro JPY, have to work out that cross for myself. Obviously, CFTC net traders is normally USD v the foreign currency. This is the only cross they do. And yeah, it's a small cross, but yeah, I found this one quite reliable over the years. Non-commercials over 14,000 in terms of their longs, just over 5,000 in terms of their shorts, so it's about 3 to 1 in terms of their ratio. Commercials the exact opposite, just over 7,000 long, nearly 24,000 short, so 3 to 1 gives a divergence of 6, which is the same as in Euro JPY. Difference between the two pairs, though, is the euro is just not making the headway that it is on the yen. It's starting to basically struggle around 88.50. Okay, so from our perspective, yeah, we should struggle up to that level, but what we need is a clear breakdown. Now, obviously, each chart is different. On this one, I'm really using the 20-day moving average as a good level to come in through. And look at it here. We break the 20, keep going, dip back and it holds, springs up, comes back, holds. It's literally touching the 20. Does the same on that red candle there. That red candle there, I think, could be the end of the up move. So basically, got a double bottom and a 20-day moving average there. And we've also got a diagonal line we can draw across those candle bodies, I think. Yeah, we can. And the tail up here. Now, that is the level that needs to snap. If this snaps, I think we're going south, okay? Now, it's just a question of how far are we going to go. Now, the obvious level is here. I just don't feel, with the euro so overbought, that this will hold. I think, we're probably, going to come back down to at least 86, okay? So if she comes through the 20 in that double trend line, you can see 87.75. You want, really, in my view, about 87.65 just to get rid of the spread. And then I'll tuck my stop back here. 88.80 will do. It'll give you about a risk of reward of 2 to 1, okay? But it's probably a less aggressive trade than Euro JPY. I actually don't think 86 longer term is going to hold. I think we're going to be going basically back to chart lows. But for now, the euro needs to confirm a top. And what I like about this one is that in terms of the central banks, obviously everyone's looking for the ECB to raise rates, but they're also looking for the Bank of England to raise rates. That's why this one hasn't run away. Now, the Bank of England are very close to raising rates. You can see it in terms of the talk from Carney and members of the Monetary Policy Committee. In terms of the ECB, like I said earlier, they're just not going to raise rates. They keep telling the market that. Market doesn't want to listen. I think the market will eventually listen, but we shall see. By the way, if we did pop up towards this 88.50 level, you could look for basically the rally to fail, tuck your stop back behind the round number at 89. Right, let's move to the last chart, which is GBP CAD. We are on the last chart now. It's British pound Canadian dollar. Obviously, we're extremely bullish of the GBP on the commodity currencies. We're already long, as you've seen, in New Zealand against the New Zealand dollar. We're also long against the Aussie. This one we're not in at the moment, but we're looking to get in. And what I like about it at the moment is we've got sideways action. Okay, I'm going to use the 20-day moving average as my main tool here again with the price action. So we've got support roughly around 168. There's a few pokes through. You could go there if you wanted, but I'm just going 168, and then really across those bodies there. I think we're in a kind of tight sideways range. They're not going to last for long. Okay, now I want to buy it. So where do I want to buy it? I don't want to buy it just as it comes out of the range. I got the 20-day here. Okay, 20-day moving average. It's right on a round number. So what I want to do is let it clear the round number, so it can go through, let's say, 170.35. Just get rid of the battle at the round number. If it breaks up, we've got low volatility, big breakout, or if we get big breakout above the 20, that should follow through. Okay, so we'd be alert for a very firm close. Where do I think it will go? You can see me drawing the line, which is there. Basically at about the 175 level. These three candles down here, these big red ones, they're just pure emotion, so I always expect them to be retraced. But as you can probably gather, I'm very bearish of the commodity currencies. So my first target, or my sort of main target, my apologies, is at 178. Now, if she does break the 20-day moving average, where would you put the stop? My own view would be it would be back behind this level here. Sorry, this level here. If we follow through strongly. So really about, if I can estimate it right, it's about 169, 60, 50, something like that. But just behind here, looking for this breakout because it's like tight sideways action. If it's going to be a good breakout, one nice strong one, see if it follows through. If it isn't strong, you just have to look at the time how the price action is. But I prefer a nice big blue candle, a bit like the one we got on the GBP NZD. I've also got momentum coming up from oversold here. RSI is up, but I'm going to wait for that level to get taken out to confirm. So they are my 4 charts today. In terms of, obviously you mix your techniques, in terms of what you see on the chart, like, I've used CFD CNET Trader sometimes, I haven't on other charts. Same with the ADX. Sometimes I'll make a 20-day moving average very important in my analysis. Sometimes it won't even come in to play. So just when you're doing your charting, keep it nice and simple. And basically pretty flexible in your approach. You don't have to do anything complicated, but be nice and flexible. In terms of sentiment, it is what is reflected in the chart, and you just got to think about what other traders might be doing when you're doing your own positions. I think at the minute, people are pretty bullish of the CAD. I think once we get above that 20-day moving average, the stops will get run and give us a nice big blue candle. Well, that's what I'm hoping for anyway. So they are my 4 chart setups for today. Thank you for watching me as usual. Take care. Have a good day.